Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's scheduled events for Thursday, March 10th. The main event today is, of course, the ECB meeting. I've talked about this a lot and even did a webinar on the subject, which is still available on the web if you want to learn about the subject in depth. To sum up what I said then, ECB President Draghi hinted at their last meeting in January that they'd increase their market assistance in March. Having said that, the ECB will have to take some steps today because of the role that confidence plays in the market. They have to appear active and in control, even if they're really not. The question then isn't whether they'll do anything. The question is what they're likely to do, and more important, whether it will be enough to impress the market. For example, they increased their stimulus in December, but Draghi had built expectations up so high that the small increase was a disappointment and euro-dollar jumped 4 cents in one day. The key point is that because of that mistake, they know that this time they'll have to do something really, really big. A second such disappointment after such strong suggestions will probably send the euro up sharply and the stock markets down sharply, and they can't risk that. So what can they do? They need to make a big impression on the market. Just changing one thing probably wouldn't be enough. That's why I expect them to reveal several new measures, including a further cut in the deposit rate. They've lowered it by 10 basis points increments each time. Maybe they'll try 15 basis points this time. The introduction of a tiered deposit rate, like in Japan. That could be necessary to prevent the negative interest rates from pinching bank profits. 3, raising the monthly bond purchases. And 4, extending the minimum duration of the bond purchases too. And finally, they may find some other miscellaneous measures to put in as well. Now, the Euribor contracts are forecasting approximately 15 basis points of further easing. That would imply perhaps a 10 basis points cut at today's meeting and a 50-50 chance of another such cut over the next year. My guess is that they'll have to exceed this in order to surprise the market. So the issue for the FX market isn't whether these measures will be effective in boosting economic activity and raising inflation, but rather whether they're enough to boost market confidence. I think these measures would demonstrate to the market that the ECB is seriously worried about the downside risks from inflation and to the economy, and is willing to take, as Mr. Draghi said on another subject, whatever steps are necessary to fight these risks. That should probably boost Eurozone stocks and weaken the euro, as happened when they first cut rates into negative territories. That's it. That's basically it for today's activity. After that, the only major indicators out are from Canada and New Zealand, and both will be totally overshadowed by the previous day's central bank meetings in those two countries. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.